$8.81 billion. Thanks, that looks like a miss compared to what analysts were expecting, which was $8.99 billion for the first quarter. Diluted earnings per common share, $5.71. So that looks like that would be a beat compared to what analysts were expecting for the quarter. So it looks like we've got a beat on Goldman Sachs.
Up 1.5%.
Yep.
I'm just waiting for you said 571. You don't have I'm waiting for it to come up. It's taking a second here. So what was the estimate? How big a beat was that?
The estimate was...
I've got 489.
489.
489. So that's a pretty nice beat there. And then you figure, I don't know, for government work, the revenue's not off much, right? What was it? Did you say?
899 was the estimate. 8.8 was what it came in at.
8.8. Okay. At this point, anyway, it looks like it's up 1%.
Yep. Joining us now, Mike Thompson, president of S&P Investment Advisory Group, and Adami, Fast Money Trader. Guy, I'll start off with you for the stock reaction.
Hey, Mel. It's great to be here.
Welcome.
I mean, Joe's breaking down golf. I mean, it's like Johnny Miller over there. Yeah. I mean, Andrew's ruined by the whole thing. He can't speak.
We all are.
Johnny's gone.
Speechless. Yeah. He's gone. Where did he go?
He retired.
Oh, it's unfortunate for him. But I'll talk about Goldman Sachs and say, why is the stock higher on this? I think it's higher because book value in Goldman Sachs came out at 209.11. The street's going to take it right to book value, and that's where it's going to trade. In my opinion, banks have become utilities. They trade at book value. I would rather look at tangible book. Tangible book in Goldman's 198, but that's what's going to happen here. I don't see any compelling reason to get long the banks here unless you believe book values continue to grind higher, and somehow magically these guys and gals will figure out how to grow earnings over the next couple of quarters. I just don't see it happening.
Mike Thompson, financials. So far, many of them have come in better than expected. What are you expecting for financials overall? And does this ever set the tone? I mean, I feel like not since before the financial crisis have financials actually set the tone for earnings season.
Yeah, well, financials, technology, and consumer discretionary are usually the trifecta. There's been a lot of jockeying around. This is a really tough quarter to read because we had a lot of constituent changes last year, which are screwing up the comps. And, of course, we have tax code. In aggregate, the S&P basically is looking to come in right now at negative 2.6. That's not going to stand. It's not going to be a negative earnings recession. There is not going to be an earnings recession. I see a lot of people parading that out. They're not looking deep into the numbers. Financials, you had a couple of big outperformance on Friday in the financial sector. That actually took the overall aggregate from down 3% to up down 2.6%. Okay, right. It went from financial sector earnings growth from 0.1 to 2.4, just with the two reports from Friday and the revisions.
Can I ask you guys a question? It says here on Goldman, net revenue and underwriting $923 million. That's 24% lower than the first quarter of 2018. They say this is due significantly to lower net revenues in equity underwriting, primarily reflecting a significant decline in industry-wide IPOs and lower net revenues in debt underwriting. And then goes on to say the firm's investment banking transactions backlog decreased compared with where it ended 2018.
Yeah.
Given the number of IPOs and isn't that almost...
One would think Goldman Sachs would be doing better, to your point,
yes,
if I'm reading between the lines. And I think that's fair to say, except, and I say this with all humility, I worked there for a long time. Goldman Sachs of 2018-19 is not Goldman Sachs of 1995-96, a much different firm. There were 6,000 people when I was there. There was a culture within the firm. There are 40,000 people there. You can't grow that and have the same culture. Plus, respectfully, Mr. Solomon is whittling down everything that was a moneymaker years ago, and he's getting into a firm which is a fee-based utility that the rest of the banks seem to be. Goldman Sachs today is not Goldman Sachs that you remember it to be, that billions remembers it to be.